Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. This is an important conversation and perfect to start the second quarter. David Sowerby is out in Detroit with Ancora. We're thrilled he could join us today and looking really at mid-cap, small-cap, and how unloved they are. David, I think this is something everybody, including me, has wrong. Okay, I didn't buy NVIDIA. Sweeney owns it. I didn't buy the other Magnificent Four, whatever. But the answer is large cap over the last decades up 12, 13% a year. Mid cap is terrible, lagging way behind. Baloney, it's up 11% per year, the Vanguard mid cap fund. Why are mid caps so unloved, David Sowerby?
Tom, I think it's because they sit a little bit in no man's land. You have small cap stocks that are trying to graduate to mid cap, large cap stocks that sometimes are on their way to mid cap. And if you think about as you position portfolios, the small cap manager is going to own names and continue to have conviction that migrate up. Large cap managers are going to migrate down in cap. And sometimes that exclusive mid cap manager gets forgotten. That's why I like something like SMID, small and mid combined.
Small and mid combined. I think about Kellanova. I don't know where you put that. I mean, that's a $20 billion market cap. Yeah, absolutely. Spun off from Kellogg's. Because Cheez-Its, Tom, and we like Cheez-Its here at 7:30.
We do like Cheez-Its. Yes, we do. It's the official food of Bloomberg Surveillance.
Exactly. So, David, talk to us about a company like Kellanova.
Sure. Don't forget Pop-Tarts and Pringles as well.
Of course.
They're growing internationally.
Battle Creek, Michigan.
And in both cases, yes. And Kellogg, the old cereal play, is having a good run as well. If you look at the Bloomberg spinoff index, it's up 25% year to date. Over the long term, one of the best, if not the absolute best formula for unlocking value in that small mid-cap area is to buy the spinoffs. And they're back on their treadmill again in 2024. And that's why I think the ability for a small mid-cap manager to outperform their benchmark is going to come buying spin-off stocks like Kellanova, like Aramark, which spun off its uniform business, and now it's just food at sports venues, universities, hospitals.
Right.
I like spin-offs, and they're a great
Duke
formula.
Final Four appearances. It looks great. Bloomberg spin-off index, Paul Sweeney, BNSPIN. BNSPIN is the index. It's on the Bloomberg terminal in your car and next to your YouTube remote control.
Exactly right. All right, David. So we step back and we think about this market here. The first quarter was just such an extraordinary performance, and really coming off those October lows, up over 25% for the S&P 500. Do you get concerned that this market might be overextended here a little bit?
Not so much overextended, but maybe that pause that refreshes. And even though the market had that 10% gain in the first quarter, the median S&P 500 stock, the median, was up about 7%. So I think there's more room to go. You're able to find companies that are generating favorable free cash flow margins, growing the dividend at close to a double-digit pace. And I think there's more room to go, recognizing the ever-elusive, we will get that 10% correction. You just got to fight and grind through it, because taking too much evasive action, trying to predict it, futile.
Crane, CXT, currency printing presses.
I've been to their factories. It was a rite of passage. You went to Crane Stationery, and you were bored. If you fell over, you'd fall into a vat and die.
Exactly. So, I haven't thought of Crane CXT in a long time. Talk to us about that story.
Well, it's a spinoff from Crane, the industrial company that has a 100-year history. So what we're seeing is not just currency demand in the U.S. as the Fed was on this 25% M2 money supply growth rate, but we're seeing it internationally, and there's more concern about fraud. So that plays into their ability to print currency and avoid fraud, and that's a global story, and it's a spin-off story as well.
Yeah, I look at this, David, and it's a great bull market, and I'm going to take it off what I call the Ancora Yardeni low of October 2 ago. What happens in a second leg of a bull market? I mean, you're a trustee of some serious money. What's our behavior we should expect in this second leg of a bull market?
I think it's still that the micro is going to trump the ever concerns over the world is a more dangerous place, macro uncertainty. But companies are going to grow their free cash at about 15% in 2024. Valuations today for U.S. stocks, large cap and small cap, I think bode over the next 3 to 5 years to compound at a 7 to 8% price gain, add in a dividend, and it's hard to beat that anywhere outside the U.S. So I think continuing to migrate into U.S. stocks. And for those small cap stocks, maybe a little less money into private equity given the leverage, and deploying that in small cap makes sense too.
David, thank you. Great way to start the second quarter. He is Mr. Sowerby. Yep. David Sowerby, who's a huge fan of the undefeated Detroit Tigers. The closest Paul Sweeney and I got to Phi Beta Kappa was Cliff Notes on Greek. Remember Greek 101 in school? Boy. It was like a 1-week course. Yep. Then you took Latin 101, and that was it. That was because Phi Beta Kappa was a great sorority. She's the real deal. Lori Calvasina, for years at Credit Suisse and on to RBC, has delivered intelligence on something nobody wants to talk about, which is small caps. Paul, you guys can explain this. Small caps, like every 10 years, they're in.
Right.
And then they go on hiatus.
Yeah.
She's the smartest on the block. There's no other way to put it.
Exactly. Lori Calvasina joins us here in our Bloomberg Interactive Broker studio. She doesn't mail it in. Lori Calvasina is head of U.S. equity strategy for RBC Capital Markets. Lori, we're up 25% since those October lows. I mean, what's going on out there? I don't see earnings rising 25%.
In terms of looking at the small cap specifically?
I mean, it's just amazing.
So look, I think there are a couple things. I think the big move in November, December, they were oversold. You saw it on valuation data. You were close to sort of recession-type lows on forward PEs in the space. And positioning data wasn't at all-time lows, but back in 2022, you had been down around recession-type lows. And so they were starting to climb out of the hole. I think when people were ready to put on the Fed rate cut playbooks, that's what sort of sparked the November-December rotation. You evaporated those oversold conditions. I think where they sit today, they're due for a bit of a catch-up trade. So you've got average valuations, 3-year high, but not all-time high on positioning. There's been some debate, right, about what the Fed's going to do and when they're going to cut and if they're going to cut, but it seems like we're still leaning in favor of that right now in the market consensus. So I think that's causing people to look at them again. And there's been, some stealth stabilization there, right? Not as many people are talking about it lately. The thing that's happening now, right, is that economic expectations are being revised up in a hurry. So you got the rate cut piece in place, you've got the cyclicality starting to develop, and if we get a lousy unemployment rate, I don't really care because small caps tend to outperform around the same time the unemployment rate starts to move up.
No, I just looked at a small cap called DraftKings. They took all my money on my final one. It's my final one.
Right, exactly.
And that's it. But most small caps don't have 35 people following them like the popular DraftKings. Is your world removed from the financial world because so few people follow small caps?
So there are fewer people. I mean, frankly, I started doing small cap in 2007, and I can't even calculate how long I've been doing it. But I think I did notice as ESG really took off, I saw a lot of my small cap portfolio managers repurposed as ESG investors, kind of move from an area that was struggling a little bit to a hotter part of the market. So there's been a big ETFization of the small cap world, and in terms of the AUM that's there. But the active managers, they're still out there doing good work. They really try to be out of consensus. They try to find hidden gems. And I think, there are some benchmark issues that make it kind of tough, right? But in general, I think a lot of the small cap PMs I see, they are talked to, they just see a lot of opportunity out there because, frankly, there are fewer eyeballs on the space.
You mentioned ESG. How does that figure into kind of your work in general? How does RBC think about ESG?
So, I had a phenomenal associate. Her name was Sarah Mahaffey, and we spun her out, I think, in 2020, 2021 to be our ESG strategist.
Okay.
So to be honest, we've just really, it became such a big thing, it didn't make sense as part of my product, really, and she was just doing a phenomenal job with it. So I really do feel like it's kind of its own world, the same way small cap was its own world for me back in 2007 or so. It comes up less in my conversations for general equity strategy. I think people who are going to incorporate it into their process have done it, and they've got their system set up, and they go talk to Sarah because she's still the real, sort of expert on it. But that's very different from maybe, say, 5 years ago when everyone was trying to get smart on it in the U.S.
Right. It seems like maybe in the U.S. it's kind of waned a little bit, whereas I know in Europe it's still the place to be. Where do you see opportunities here? I'm not sure if it's market cap, if it's factor, if it's sector. Where are you seeing opportunities right here? Because a lot of folks are saying, boy, this market's moved pretty aggressively.
Look, I make sector calls. I don't talk about them quite as much in my meetings the last few months. We've been talking a bit about energy, utilities recently, but the reality is it's Mag 7 versus everything else, and that everything else can include small caps, financials, energy, healthcare. There's a lot of stuff that looks really interesting out there.
In your meetings, and you're a worker bee, and you're in all sorts of meetings where I'm sure people are saying, look, I missed this. I missed last October. I missed 2 Octobers ago. Forget about NVIDIA and all that. Lori Calvasina, how do I catch up? How do I enter the market? You're not going to give me dollar cost averaging, right?
Right. And look, what I'm telling people is let's start on why we missed it. What I think essentially happened in 2022 is we had something really, really close to a recession. 2 negative GDP quarters, any valuation metric in small cap or just general sentiment barometer I can look at got to recession type
and
lows.
without the stimulus, I think everybody says we would have been there.
Right. And why did people feel so bad, right? You look at the Michigan's Consumer Sentiment Index, it went down to recession type lows or worse than a recession as inflation spiked. So the misery index did what it does typically in a recession, but it did it because of inflation spiking, not unemployment spiking. So I think you have to look at recovery trades. Small caps are part of that, cyclicals are part of that, financials are part of that, as kind of the plumbing of the economy. And you look for things that have these recovery aspects that still have some good valuations in them.
How about energy? I got WTI crude oil at $83
a barrel
here.
I looked this weekend. It's amazing how Exxon is behind.
Yep, I filled up the ride this weekend down to Jersey Shore, $3.20 a gallon. What's going on with energy?
So look, energy is a cheap sector. Despite the move, it still looks cheap, both large cap and small cap. If the oil prices continue to be strong, then we'll see the earnings revisions come. They haven't really yet, but I think this sector is, 1, an inflation hedge, and 2, I also think that it's just a different sector than 5-10 years ago. The ESG concerns have kind of fallen by the wayside. The dividend yield is the highest of any S&P sector, and it's also very, very high relative to history. So in an S&P 500 world where very few companies offer a dividend yield in excess of the 10-year treasury, you can find a lot of that in energy if you're an income-seeking investor.
My theme 2 years ago was a roll-up, the great zombie roll-up. And it can be zombies or frankly it can be quality companies. Is that what's coming this year? Is we're going to see a roll-up of small cap into mid into large?
I don't know if you're, I've had some questions on M&A and if it's coming back. One PM I talked to recently was talking about how the small cap PMs all look at their portfolios end of the year. How many takeouts did I have? I had one guy tell me it was as low as he's seen it in the history of his career, and so he's sort of wondering if it's coming back. The only thing that gives me a little bit pause in saying that it is that I do think one of the things that pushes M&A is the idea that economic growth is lacking, and economic growth forecasts are picking up in a hurry. So I'm not saying he's wrong, but I don't know that the need to go out and buy growth is all that strong.
And Lori Calvasina, thank you so much. Terrific briefer. Back-to-back, David Sowerby and Lori Calvasina, inspired
we have
by the surveillance
production
team.
back there.
Inspired.
It's
amazing.
done back there.
I'm glad somebody was
we like to throw them under the bus
this weekend. Ian Bremmer's smartest guy in the block. He stole from Bloomberg News, Emre Peker, who joins us now, who was definitive in corporate finance and, the crash and all that 07, 08, 09, and now is on the turkey watch for Eurasia Group. And we're thrilled that Emre on short notice could join us this morning. The shock of this election, Emre, and I look at Erdogan saying this is my roots. I was the mayor. Istanbul is my heart, but he's lost Istanbul. What does it signal for someone 22 years on the watch?
Yeah, thanks for having me on, Tom. Great to be on the show. So I think it says two things. The first and ground-shaking one is that Erdogan and the AKP's dominance of Turkish politics is over. As you well know, that people used to call him Teflon Erdogan, right? Nothing bad stuck to him ever, including very bad economic circumstances. But going forward, Erdogan and the AKP will have to fight tooth and nail for every vote. They're down to 35% now, which is roughly where they started when they first founded the party in 2001. The second point that I'd like to highlight is that despite more than a decade of political polarization, values, social issues, etc., at the end of the day, people are still voting with their pockets. And this was Turkey's version of it's the economy, stupid.
What does he do with his new central bank team, with his, I'll call it Chancellor of the Exchequer? I mean, what does he do to stop, Paul, what did you say, 80% inflation? Something like that? What does he do, Emre, to turn the ship around other than a lira devaluation?
I think it sticks to the game plan in the short term, right? Treasury and Finance Minister Mehmet Şimşek has been administrating the bitter pill in slow but increasingly harsher doses since June of last year, when he came back to government, took over the reins as economy czar. The central bank is working in very close coordination with Şimşek. We don't anticipate that to change, especially in the short term. Erdogan's comments last night also suggest that he's wedded to this economic policy rebalancing normalization effort, but he will want to see results. So if Erdogan had done better yesterday, Şimşek would have a much greater maneuvering room. Now, Erdogan will want to see results from summer onwards once we've hit peak inflation anticipated around 75% in May. If Şimşek doesn't deliver, then I think we're in a bit of a tight spot from fall onwards. And in terms of what he will do, we anticipate him to continue quashing consumer demand. So it's very bad for the households, and then selective lending to export-oriented businesses. But a lot of SMEs are going to be hurting from this.
So, Emre, just give us a little history lesson here. How did we get to this point with the Turkish economy?
Let's see. 2011, Erdogan secures re-election as prime minister, calls it my master period, and starts banging on about the interest rate lobby and says high rates cause high inflation. I want low rates. A succession of central bank governors play with magical realism, create these interest rate corridors, do backdoor tightening while loosening at the front. The banking authority undermines what they're doing. Fiscal and monetary policy don't speak to each other. And in the end, Erdogan puts all the burden on very loose credit to keep consumer demand going. You have that, especially on the back of the global financial crisis and the period that followed with all the quantitative easing, extra loose monetary policies, negative real rates. He got away with it for years and years and years until he couldn't. And it really accelerated under the first executive presidency term starting in 2018, when he got rid of all the capable policymakers in his cabinet, appointed his son-in-law to run the economy, who proceeded to sell more than $125 billion in reserves to keep the currency stable. And that's where we ended up.
Emre,
wow, that's a lot.
in the time we got left, Emre, and there's 8 ways to go here, but let me coalesce it around to the U.S. Response. I don't want to do a clinic now on how smart I am on Turkey. I'm not. But I look at someone like you, and that would be Soner Kagapte, in his wonderful book, Erdogan's Empire. It was my book of the summer X years ago. Yeah. And his new book is A Sultan in Autumn. Is Erdogan in his autumn facing winter? Or at 70 years old, does he just keep going?
I think you will find it increasingly difficult to keep going. Folks that I talk to in Ankara and also in Istanbul who are close to the president always say that Erdogan is no different than any other successful, strong Turkish leader. He will be at it until the very end. So I don't anticipate Erdogan to willfully step down from any positions of power. That said, yesterday's election results, the makeup of parliament currently, the economic challenges, these are the worst circumstances he's ever faced since coming to power 2 decades ago. So I absolutely agree with Sonar's take that this is Erdogan's autumn. Maybe we're still in the mid-September phase,
Right.
so there's a long way to go. But it's not going to be easy for
Right.
him.
How should Mr. Biden and any future administrations respond to our NATO allies' new vote?
Business as usual. I think what the Biden administration has succeeded in doing is very important, which is reinstitutionalize relationships with Turkey. I anticipate that to continue because Erdogan also needs stability on the foreign policy front to continue his balancing act between NATO allies, Russia on the Ukraine war, in the Middle East, given the Israel-Hamas war. And in all of these things, having good relationships with the US helps. So I think Biden and Erdogan will continue to work in a transactional but constructive manner. And Erdogan will want to keep that up after the November elections in the US as well.
Emre Peker with Eurasia Group, Ian Bremmer's Eurasia Group. Thank you so much for that briefing. Lisa Mateo here with a truncated newspaper. We could put a cork in his mouth.
How do I follow that?
How do you follow
My
Kathmandu?
head is still spinning.
Please.
I can't even. All right, we're talking about home ownership, how much it will take you in salary to be able to afford
This is
just a
grim.
regular home. Okay, so this is from Bankrate. It's a new study. It says you would need a 6-figure salary. So that's nearly a 50% increase just the last few years. Here's the specifics, just to give you an idea. So to afford a medium price home, let's say nearly $403,000, Americans need to make an annual income of just over $110,000. So
To
that
me, it's
puts it into
global.
perspective.
In Paris,
Yeah.
there was no other topic. The
why aren't
people
they-
there are talking about housing.
We're not. Our population is not exploding. Why aren't we just building more houses? I don't get this whole thing.
Yeah. That is
I
the
don't know.
problem.
I mean, it's housing.
Running out
It's
of
not-
space.
How hard can that be? We got a lot of land in this country just built. I don't get them. Okay.
Oh gosh. All right. This is for the kids. So if you have kids who are on Snapchat, there's a paid feature. Apparently, it's called Snapchat Plus. It'll cost about $4 a month extra. But here's what it's doing. It's getting kids anxiety because it lets them see their position in their friends' digital orbits. So, for example, it lets you know how much your friends are communicating with you, and it puts it into like this solar system metaphor. So if you're a Mercury, that's good because that's the planet closest to your friend. So you see it does these little metaphors. It can be shut off, but it's on by default. So these kids are getting, into fights, these BFFs, boyfriends, girlfriends, everyone's arguing because they're not at the top of the
This is like
list.
therapy, Paul. This has nothing to do with the news. This is the Mateo household we're hearing about here.
Well, I won't pay the $4 extra for my daughter to get this, I'll tell you that much. This is another teen thing, Brandy Melville. So we talked about this before. It's run by this secretive Italian family, okay? So it's one size fits all. I went to the store with my daughter and I'm looking at this shirt saying, how is everybody going to fit into this tiny little thing? I don't understand how it's one size fit all. But that's the whole controversy behind it. A lot of people are saying it's made for skinny, mostly blonde girls are filling its social media feed and staffing its stores too. So that's kind of the controversy behind this whole
It's
clothing
Italian.
brand. Yeah.
Run by a
I just
secretive
assumed
Italian
it was.
Secretive Italian family.
I just
yeah.
assumed it was American, and I'm walking down the street in Florence, and there's a line out the door like it's the best pizza in town kind of thing. No, it's a line of ugly Americans lined up to buy one size fits all at Brandy Melville. Is
Yeah.
anybody copying this?
Yeah, well, you know what it is? They're going against because all these fashion brands are leaning into inclusivity. They're adding bigger sizes and more plus size and racially diverse models. Brandy Melville's, they're not doing it. So I don't know. 41 of its 50 stores are in the U.S. actually.
Yes.
So.
Okay. One more?
All right, one more. So, if you're tired of getting that ping or email or phone calls from your boss in off-work hours, okay,
Sparta
there
would do
is
that.
some new legislation. It's from a San Francisco lawmaker trying to be the first in the state in the country to give employees the right to be able to ignore it, to hit the ignore button, except if it's an emergency or if there's a scheduling change issue because of it. But this is Democratic Assemblyman Matt Haney. He's trying to do this to allow employees to kind of ignore those. He got the idea from Australia, actually has a right to disconnect law that's going to be implemented later this year. But it originated in France, this whole idea, okay? It spread to different forms from Canada, Italy, Belgium, Philippines. They're doing this as well. New York City tried it in 2018, didn't adopt it though. But there's a couple restrictions behind it, but they're trying to give employees that right to say, you know what? Don't bother me. It's the weekend, off hours.
Well, when I see on my phone somebody has notifications shut off,
Right.
I try to respect that.
Yeah.
I mean, I was going back and forth with Rachel, the Boilermaker, and, her notifications are shut off because she's at the game.
Yeah.
And,
okay.
I try to respect that. I mean, do you?
When I was managing Bloomberg Intelligence, I assumed that my people were 24/7.
Yeah. Yeah. This is
That's how I grew
world.
up,
That's how we grew
24/7.
up.
But maybe it's different now. I don't
No,
know.
it's different. I hear from a lot of people it's different. Lisa Mateo, thank you so much for the newspapers. Hugely popular. Thank you for that. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.